All right, so we're gonna be doing day five and right now, and basically what I'm gonna just do is cover the strategy. I finally got time to do it, so I just want to cover the strategy, break down what's going on with how to basically tie it all together, masterclass style. Um, Basically for everything I have done from day one, two, three, and four is basically just individual content on simplifying the method until the method actually arrives, which is now going to be officially day five. Now, my overall goal with this is that if you do watch this video and you're understanding how everything is working, just keep in mind these are just short-term versions of understanding how the strategy works. The longer, more detailed versions will be exactly inside of the course, where you can find easily online by simply just finding my link tree and tapping into the free masterclass course. It could be anything that I have going on. Either you're seeing the links pop up on Kick, the links popping up in Telegram, the links popping up on YouTube. It'll be in the descriptions, and then obviously the broker that I use will be pretty much posted in those same individual places. But the course is free, so if you want to like really understand how I do everything in full detail, I recommend that you go watch the course. So without further ado, I'm going to damn my laptop. Hold on. My laptop about to die. What's that laptop? My bad. Keyboard. Damn. So let's get right into it. The actual math class. So let's get it popping. All right. So right now, when it comes down to the masterclass strategy, perfect. What comes down to the masterclass strategy is if you got what it takes to understand everything. It's simple. Just apply risk management and apply the method. Keyword. Step one, apply risk management and apply the method. So I'm gonna stress this off the top. Risk management. You're going to find how to do that once again inside of the fibs in these areas. Okay. You're going to simply be using, I'm going to divide these up. You're simply going to be using these three entry points here with this stop loss here. Okay. You're going to be
And the winner is
using
my life real quick.
these two here with this stop loss here. They're presets. So as long as you understand how to draw your Fibonacci on any given day and basis, and you apply risk management, okay, keyword, the risk management, this is why I'm stressing this. The strategy will not work if you're not applying your risk management. The goal is to be profitable by applying risk management, okay? And ultimately using your period separators, as you can see here, to identify how the market is going to perform. All right. So that goes back into day four, identifying trends and all the good stuff that has been posted online. Now, what I want to do is when it comes down to this strategy, I want y'all to understand that this strategy is very simple, it's not complex. It literally takes 5 to 10 minutes to set it up. So, what I would like to do is actually go to a chart, and break down the strategy, something that I haven't touched in a while, so you can see how the strategy works. Since it is the weekend and it's the crypto market, open, I don't think I want to just look at Bitcoin, for example. I'm gonna like bring out something different, something completely random, just to cover the strategy. So I'm gonna clean up this chart real quick and break down how to go about using the strategy. Strategy, once again, is very, very simple to do. It's not going to be anything confusing, but once you understand it, you're not going to forget it. I promise you that. I'm probably going to load um, Ethereum, for example. I know I don't mark that up, so I'm just going to mark that up and actually teach the strategy on Ethereum. And I might take a trade on Ethereum to prove that the strategy works. And if you're using this platform, y'all probably wondering what the hell I'm doing. Right now, I'm just cleaning it up so I can load a new pair onto this template and not have to worry about doing all the extra markup stuff that I have covered already inside of the other YouTube videos of day 1, 2, 3, 4. I'll just get straight to the strategy. As I'm looking at doing Ethereum, I kind of don't even like it. Kind of. Throw that bullshit right here. This actually could be an interesting markup. All right. Let's move that. So step one, when you have your strategy set all up, my bad, the layout all set up like this, you got 2 H1 charts, a H4, a daily, a weekly, and a monthly. It's very important that you start on the monthly time frame. This is how I do it on a day-to-day basis, on how I execute my strategy. I then go to this diamond here on this platform, and I get my Fibonacci retracement. Don't matter what platform you're on, as long as you got Fibonacci retracement tool and your period separators, you could use the strategy. That's all you really need. You need those tools, guaranteed. Okay. All I'm going to do now is that I'm going to look at this market. I'm going to look at this market and I'm going to find my ultimate low in the market and my ultimate high in the market. Okay. Indicating a a bullish trend. Now, the reason why I'm looking for a bullish trend on the monthly time frame is because I still believe that this pair is overall still bullish. I didn't really break out past this low for me to identify that this pair is going to be heading to a downside on the monthly time frame. So I'm already going bullish on the monthly time frame. Remember, the monthly and the weekly is going to represent the whole year. So I do like the fact that I'm looking into a bullish outlook on those two time frames. They both literally are the same thing. The monthly is just less candlesticks and the weekly is more candlesticks. Once again, they both represent what's going to happen within a year on those period separators. Okay. So now that I'm taking this logic, I'm looking to see how can I long this for this pair. Now, I don't know what's happening with this crypto run. It's kind of like whatever. But in realisticness, this will be the overall target this year for Ethereum. And notice, once again, due to strategy, I'm looking for these entry points on this pair. Notice this area is opportunity. This area as well is now opportunity. Okay, you literally have 5 entry points that you could give yourself on any given day with 2 stop loss options with 1 take profit option. This is the trick of the strategy. Okay, so if I'm at this 78.6 here, that is going to give me a 1-3 opportunity here. You see what I'm saying? So we have that right now in Euro USD if we take this entry point here with this stop loss here, targeting this TP here. Very simple. And this is off of the weekly time frame. So this is going off of what can happen in the rest of the year. But I'm not going to trade the weekly time frame, obviously, even though you can. And I'm going to give you an example of that. All you're going to do is grab a pending order. For example, you're going to put a stop loss at the bottom where that 110 is. And then you're going to grab that TP area. And then all you're going to do is now alter your lots, for example, and choose what are you're comfortable risking to make a return. So I'm gonna give you an example. This is a 100K account. If I want to risk 10K, I need to be around a 0.45, it seems. A 0.45 to long this pair to 5,922 with a stop loss at 1,028. So I'm gonna give you an example of this. This is how it's going to be done. I literally just engaged in a full pending order to prove that the strategy works on the weekly time frame. I'm still risking 10K, but I have to lower my lot size to get the overall target, which, as you can see here, the 1-3 makes sense. I'm risking 10 to make 33. You see what I'm saying? So all I'm doing is basically mapping out how's this going to be in my favor. I don't think Ethereum is going to get back to $1,024.51. I do believe it's going to actually go up more, so that'd be around $5,917.74. Long position, okay? Once again, I'm trading the year. So this is year 25. This is year 26. This is how simple the strategy is, okay? I'm not saying that everybody has to participate in trading the year-to-year strategy on the masterclass style, but I'm just showing you that, yeah, we could take swing trades. Yeah, we could do this. Yeah, we could take long-term trades. You just got to risk what you're comfortable risking. Now, let's go to the daily time frame. Let's see what's going on and why is it overall going bullish. Keep in mind, this looks like it's doing the same thing Bitcoin is doing. Price here is kind of flat. You can kind of see right here the tip of the body, the tip of the wick is here. So we already know this is overall a demand zone. So we could basically go ahead and mark that up due to strategy. Wow, I messed up. Meant to click lock and I ended up clicking delete. I'm now just zooming in real quick because I want to make sure it's on it properly. All right. And sometimes you're going to have to do that while using a strategy. Just make sure you mark it up right to the point. Now that we have that marked up, it identifies for us what we are currently looking at, which was, for example, price is flat, as you can see here. And once again, we could also identify that there is massive bullish divergence here. Okay? Literally lines up to everything, as you can see. Now that we know that's bullish divergence, we could also see that price is looking like it's getting close to a retest. It also is identifying that we have on the daily time frame. So keep in mind, this is the month of March. Give me a second. So we're on the month of March, and what we're looking for is how is this turning into a long overall position. Notice as well, price broke past this 50 SMA. So this indication of it going bullish. So technically you already know that we're looking for a bullish outlook for the month of March. The consolidation isn't what's defining us. as well. That's why the weekly time frame, while we work our way from the higher time frame down using the masterclass strategy, is to see why things are happening on the lower time frames. We already can identify that this 88.6 remains true, and this is the support that we're looking at on the daily time frame, which created that double bottom. So now we go back into that overall outlook, we can see the double bottom and we can see how it's building. A double bottom clearly off of that demand zone and created that bullish divergence. Okay, so we understand that this position, in fact, is actually going to be going long. So all we got to do is draw from the bottom to the top part of where this session started, because this wick right here is where the session started, since that's the only high. So I do want you to pay attention to where that is at. Once again, we're looking for this high here, right on that dotted line, to this low right here. Okay, using strategy. So the way how I'm gonna do this is that I'm gonna grab my Fibonacci and I'm going to be drawing from the bottom to the top. But I'm gonna come over here a little bit so I can angle it off. Okay, I'm gonna get where the 0 is at. As you can see where my mouse is at, and I'm going to line it to the top of that wick, literally where the arrow is pointing. I'm going to let go. Oh, crap. I'm going to let go. Lock in that fib at the top. I'm going to take this bottom point, and I'm going to draw it directly on the bottom. And all I'm going to do is go ahead and lock that in. And now you can see here the overall outlook of how this is. And in some cases, if I want to be extra OCD, I go to the cursor, I grab the mouse, and I go to the crosshair. And all I want to do is just mark off where the 0 is at and see if that aligns properly with the top of this wick, which it does. So I know the top remains true and the bottom is obviously easy, but sometimes you have to do that when it's on the dotted line. So you just want to see you're accurate for sure. Okay. Then I go back to the move, it gives me flexibility to move my charts around again, and I get to see the overall look. I got my demand zone. I'm comfortable. My time frame is locked in. I don't really have to overthink anything. My indicators and drawings are all, my drawings are locked in. So now I'm gonna go ahead and save my work because I don't want to redo it over again later on if something was to occur. Now that we're looking at this overall setup, notice the 78.6 gave us accuracy of why it started going up. And keep in mind, we had all this opportunity to enter this month for the month of March. Without overthinking it, we could see that we had a 1.3 available here, a 1.2 available here, a 1 to 1.5 available here, and a 1.1 available here. And this is still the overall target, $2,673.22. Okay. Now that we have that, we go down to this H4 time frame. So all we're doing is going into each time frame, going into each period, and seeing how the market is overall going to move. Strategy, once again, it's very repetitive. The only difference is you're redrawing on each time frame. So here goes another one. When we look at this, we understand that this clearly, in this time, market closed overall bullish. It stayed in the highs. So we see, for example, this is a low, and this is the high. So we need to draw the Fibonacci from bottom to top. So I need to draw from here to here. And all I'm going to do is make sure it's all the way on point. So the bottom of the wick right here and the top of the high right here. Not too hard. Lock that in. Clear up just little drawings that I did. And look at that perfection. Price bounced off of 38.2. This gave you a nice 1-to-1 risk to reward. Right? I'm going to put RR next to it. And as you can see, it hit the perfect area of where I like to take my money. It hit the -27. I call that TP1. And obviously this is TP2, but I don't look for TP2s for exits. I exit only at TP1. I look at TP2 for signs of reversals, pullbacks of, basically that's just what it is. Price got there, and as you can see here, it's kind of like made a double top. Inside of that double top, you can also see there's bearish divergence. There was clear exit strategy right there, and I would have gave you a nice 1-1 for this week from Saturday at 5 p.m. Eastern time. As you can see, there's a new period that just opened up. It's 6:59, so we're about to move on to the next candle, and well, this is H4. So we're about to move on to the next candle in 2 hours and 27 seconds. So this market is letting me know, okay, from last week Saturday at 5 p.m. Eastern time to now. Actually, no, this opened a lot sooner. So it'll be 7 o'clock. So it's about to be 3 hours in. It's open at 3 o'clock. Okay. So this candle is closing around 8 o'clock. So what I'm getting right now, not really, it's actually, yeah, open at 5 p.m. I'm tripping. It's 2 hours in, 1 hour and 59 minutes. So 2 hours in. So this open at 5 p.m. I don't know why I thought something different. So this open at 5 p.m. And as you can see, the market is now showing you that it's basically giving you a new week. So from last week, Saturday at 5 p.m. to this week, Saturday at 5 p.m., within the first day, Saturday through Sunday, market already hit its overall target here. Okay? So the strategy is already showing it works because I haven't done nothing different. I just followed what the overall trend is showing me, and I'm drawing to match that trend. So I understand I'm overall bullish right now. This week, it looks like it's about to go bearish, but I don't know because the daily time frame is basically identifying an area of possible pullback. And I do believe it still hasn't reached its overall target. And this is looking like a neckline retest. So here's the tricky part. If you see the daily time frame going overall bullish like this, and you can tell it's a retest back into the neckline over here, hence there's a zone, you can see that the H4, even though it might be looking a little bit bearish, overall, I do believe we're going to still continue bullish. And once again, if you're trading the daily, your stop loss is already out of the range naturally. But right now, as you can see, I'm trading the weekly. So I'm trading the long-term goal. Now, there's two H1s that you can see here for the strategy. So the way how I like to do this is two ways. A bearish fib on one and a bullish fib on the other. So if you got it wrong for the day, you could look at the other one and it will show you what you could have done better next time. So you might have identified reading the trend the wrong way somehow, or you might, have it right straight up. In this case, market is in strong consolidation. I do believe we're still overall bullish inside of this long consolidation. I do like how it's still maintained bullish flow. So I'm overall still bullish inside of this nasty consolidation. So even if I'm looking at it, I'm seeing right here being the low point, and I'm seeing right between these two, I got to identify which one is higher, right? So there's ways of doing that, obviously. So what I'm going to do is I'm going to grab this crosshair, for example, inside of the toolbox, and I'm going to take it and I'm going to plant it on top of the wicks. Looking at both of them, they're identically the same. But if I really want to be super anal about it, I could zoom in more. And I could tell the blue wick is just a little bit longer, just by a little. So I'm going to draw from this low point to this high point. And this is basically all I do for strategy. And I look at the RRs, the entry points, and I determine how much do I feel like risking on any given day. Keep in mind, these are better odds than going to a casino. These are better odds in sports betting. This is better odds in many, many things. But it's up to you to lock in and trade the strategy. I feel like this is one of the most simple strategies ever in the history of fucking trading. But once again, it's up to you to decide if this is something that you can relate to. If this is not something that you can relate to, I might not be the mentor for you. But if this is something you can relate to due to the simplicity of it, then this is something that might relate to you that you can actually grow with. But once again, I've been doing this for 11 years. So it all depends on what you're doing for you on time. Your eyes looking at the market is the best teacher because you're going to remember and see off of a visual perspective on a day-to-day basis. If you are trading day-to-day basis or a week-to-week basis or a month-to-month basis or even seasonal basis, you have to put in the time to look at the charts and see how they move. And that's basically how you get better at trading overall. But as you can see here for this overall setup, once again, it's very simple. All I'm doing is looking for a low point and I'm looking for a high point. And all I'm doing is drawing into that overall trend. As you can see here, closed bullish. I understand I'm going bullish. So overall, this will be my target for the day. And these will be all of my entry points for the day. And once again, these will be my stop losses for the day. These two right here will be for this stop loss right here. Once again. And I'm color coding that just in case. These right here will be for this stop loss right here. We're only targeting this TP right here. Keep in mind, you got a 1-1 right here. You have a 1-1 right here. Actually, let me do that in blue. You have a 1 to 1.5 right here. You have a 1-2 right here. You have a 1-3 right here. And you have a 1-5 right here. This is going to get your 1-3 and 1-5. This is going to get pretty much all of these right here. I'm not going to write them out. You know, and that's basically all you're doing on a day-to-day basis, trading the strategy. Now, without me, if I was if I didn't have to talk as much, explaining this, I would have been done with this faster on any given day and basis. As you can see on the actual website, when I actually talk about it, no cap, this probably will take you about 5 to 10 minutes to do on per pair. So if you want to trade 3 pairs, you're looking around maybe 15 to 30 minutes of charting time. If you're if you're doing 2 pairs, you're looking around 10 through 20 minutes of charting time. You're just doubling these numbers. If you're doing 3 pairs, you're looking around 15 to 30 minutes charting time. So just keep that in mind. You have to mark up your charts. I like to always mark up my charts with this strategy on Sundays, personally. But since we're looking at it on a Saturday, I'm marking it up because I'm trading cryptos this weekend, as you can see here. So all this depends on what you're doing for you. And once again, when I'm doing penny orders, notice right now, I'm not even in a trade. I'm not even forcing a trade. I'm looking at that weekly time frame for price to get back to this area. And as you can see here, I'm letting the market come to me. I'm not chasing the markets. Notice the H1 time frame hasn't even got there yet. So I'm waiting for that to double bottom somewhere around here. And then you could get in. In some cases, if you want to just jump in looking at this weekly time frame, you know, you like it, you can market execute this. You don't have to have this as a penny order. You could literally go in, click this, type in what you want, drag the stop loss, drag the TP, for example, and then go ahead and then just check mark this again, and it will run the order. You just got to play with your lots. You know, this would be like a full market execution. So it just depends on what you want to do. All right. So this strategy, once again, it works. It's just up to you to work it. And I just hope everyone does take this strategy and take it serious. If you're studying the masterclass, if not, that's cool. Just once again, no harm, no foul. I just know this is what works for me. I've been doing this for 11 years, and I know it works for many others across the world, thousands of people worldwide. It's just, once again, it's up to you to decide if you want to use the strategy. Phantom, you said, can you just put penny orders on the entries, or is it better to hold off depending on the news and stuff? Nah, you don't have to worry about news. News is irrelevant with the strategy. Strategy works before the news even hits. Before a market pattern even prints, before a candlestick pattern even shows, the strategy is going to have the answer before it even gets there. You get what I'm saying? Because it's all about penny orders. So if you see an entry looks so perfect, you got that entry before the market even got there. You're letting the market come to you. And then if it does respect that entry, it's going to obviously show a candlestick pattern or a market structure pattern, and it's just gonna look like you perfected everything. But in reality, you just played off of the PRZs. Now, the thing about accuracy when it comes down to time and time again, seeing more consistent trades, obviously keep that in mind. These three are going to be the most actively traded. These two down here, you're not going to always get them. So I did stress on another video on how to really turn up. You could literally take this entry point on one other account and just have it at 20% risk per trade. And every time that happens, since this gives you 1.5 RR, you take 20 times 500. My bad, 20 times 5. Why did I say 500? 20 times 5. And as you know, that's 100% if you want to go for a straight shot. And you could do this on another account, only targeting 88.6. If you really, really think about it, if you do this consistently for 6 whole trades, you could be up stupid money. Example, if you started this with a $1,000 account, you'd be up 6 figures. If you do this with a $500 account, you could be high 5 figures in 6 trades, but on a side account, not a main account. If you want to get super, super, super consistent trades, you just got to target a 38.2 and use this on a 1-1 and then trade anywhere between a 1 through 10%, depending on your risk. I know a lot of people are higher risk takers and I understand that, but this will be your range on average when you trade. If you want to play the 20% game on another account, this will be it. You need to lose 2 trades to be down basically half your account. But if you win your first 2 trades, you're pretty much up. You're chilling. Keep in mind, 20% is heavy risk. All right. So I feel like I've answered everybody's questions. Went straight to the point about the strategy. Once again, it's up to you to decide if you want to use a strategy. It's not something that's super, super hard to use. It's just, once again, do you have what it takes to use the strategy and make it work for you? Not strategy related, but how often does slippage happen with liquid in your experience? Not too often. Remember, slippage don't happen due to the broker. Slippage happens be due to the liquidity provider. Liquidity providers might have liquidity issues when price can't get caught. Example, flash crashes. Those may happen. But the good news is, if any slippage does occur due to any issues, the platform liquid that I use actually rectify the issues and it will actually compensate you for any damages to your account during those weird situations if they were to occur due to technical difficulties. Hence why I love trading regulated and I love this platform. You have a peace of mind. So all you need is a good strategy, get funded, like funding your own account and trade. That's why I'm not too big on prop firms. You get a good strategy like this, you can really turn up. All right. If you're going to actually use the platform, I recommend you use my affiliate code. Once again, I'm very open about this. When it comes down to me, I don't want nobody paying me for my strategy. I don't want nobody ever paying me for anything, really. At this point in my career, I just want to get paid off the lots traded on the platform. You're doing good, great. I make money on the back end due to lots traded, affiliate commissions. If you're doing bad, I don't get paid. Obviously, there's no lots being traded, so there's no activity. That means that's bad. So if the strategy works and it's working for you, great. You're making money long term. Life's great. Everybody's happy. It's a win-win. That's why I do this. And why I'm doing it, right? And I feel like that's the best vehicle when it comes down to this industry, because why would I want you to pay me and then fund your account? Now you're just spending extra money. See what I'm saying? I want you to keep your money so you can have more of the fun for you, so you can do more for you. But I will give you the best strategy that I possibly can. Oh, shit. I just realized something. This market is done on the H4. So I'm still overall very much bullish on this pair. And as you can see here, like I said, I'm still overall bullish due to the overall logic of that daily time frame and that weekly time frame. So once again, I'm drawing from that low point here to this high point here, and I'm looking for buys. And I feel like what's going to happen is price might come down to here. Oops. So you can get good buys. Price right now is here. So technically, you have 1.3s and 1.5s available. This is what I'm thinking is going to happen. But let's see. This is just due to the common interest of it, me still believing we're overall bullish until proven wrong. All right. Let me actually save that. So and I like this overall logic right here. Price more than likely is going to bounce off of this area here and go long. So intraday wise, we might have a nice 1.3 right now to go long. I like it personally. I really do like it. I'm actually probably going to engage in it. Okay, let's play with the lots. I wonder if they fixed that. I believe the last time this was a thing, they weren't allowing. Okay, they're allowing it. Hell yeah. So I'm giving y'all a perfect example of strategy. I'm risking 10K. So I'm going to delete this. I don't want it. I'm risking right now 10K on a 1.3 setup to make, actually, no. It still counts as a 1.2. I'm tripping. So I'm risking 10K on a 1.2 setup. As you can see, it's double the return to make money. Remember, the 1.3 is at the 78.6. I got it confused with the H4 being the 78.6 right now. But yeah, this is what it is. So intraday trading wise, I have opportunity to risk 10K right now to make 22. Y'all get how simple this strategy is? I didn't even have to overthink this shit. So all I got to do now is just go on my day. Literally, I don't have to monitor nothing. I know I'm risking 10, and I know I have potential to make 22, meaning I have opportunity to do what? Walk away. Leave the computer running, shut off everything if I wanted to, and then just look at everything on my phone, and then just go on with my day. Give me a second. This is funny. All right. I'm gonna get this up on YouTube. Y'all stay blessed. If y'all stay tuned in this video, click the bottom of the YouTube description and welcome to my masterclass. See you on the other side. Peace.